Well, hi, everyone, and welcome to the Buffett and Beyond Saturday Stock Market Recap for June 21st, 2025. And folks, remember, if you want to live on this beach like Jimmy Buffett used to, then you've got to learn how to invest even better than Warren Buffett does now. And this week, the market ended the week on the war worries, just like last week, over in the Middle East, and tariff worries affecting our own pocketbooks. And the Federal Reserve says they are forward-looking, but rely on backward-looking statistics in order to judge the direction of interest rates. I don't know. I find that a little contradictory. Anyway, the weekly stock analysis video, we take a look at Palantir, which is up a mere 450% over the past 12 months. And our ETF video, the semiconductor stocks led the advance for most of the week. Now let's take a look at the workings of our computer program so you can pick those stocks and how we look for the top stocks in the semiconductor ETF, which are outperforming, the top stocks now are outperforming the ETF itself by 14% so far this year. And let's look at the S&P 500, and the red lines are the volatility bands, and you can see the market is just drifting lower, and it fell below that 6,000 level, sitting right on that 20-day moving average. So Monday is going to be very, very interesting on where this market wants to go. But down here we can see the intermediate term indicator has definitely turned down, with the blue line crossing over the red line and now below it, which means that the market is just slightly drifting lower, and it did today too, or I should say all this week. And let's take another look at the candlesticks on the S&P 500, and you can see how the market just rolled over and hit this 20-day moving average and is down about 30 points for the week. So we have this indicator up here, which is stochastic, which means where does the market fall during the range of any particular day? Does it fall in the top half of the range or the bottom half of the range? And this is telling us that it is falling in the bottom half of the range, and so it's going down. And we've got this little divergence here where we have this top here, and right here makes a lower high than back here, but the market is making a higher high, or has made a higher high, and that is a bearish divergence. And so we have this indicator turning down, the market turning down to the 20-day moving average. And then down here is the same indicator we saw on the last slide, but you could see it a little better. In this case, the black line is leading the red line lower. So we're overbought, and the market is just not so sure of itself. And the tech stocks and the semiconductor stocks got hit harder today than normally because they've been leading the market up, both last week and this week. So we have a dichotomy going on here in the market, folks, and let's see what Monday brings us to see if this market falls below that 20-day moving average. That'll be the line in the sand going forward this coming week. And when we look at the put protection that we have for about $150,000 portfolio, and this protection is about 12% below the market. So if the market should fall further during this coming week and maybe the next week, then these puts will grow in value. So these are our put protection, and just call it like an insurance or a deductible insurance on your car, where you say, I want to insure my car, but I want $1,000 deductible or $500 deductible, and you get your insurance a little bit cheaper. So in order to pay for this insurance, we have been selling covered calls over the past several weeks, and that has given us the money to buy this put protection. So it's not money coming out of portfolio appreciation, which has been hard to come by this past year. And right now the SPY is down about 3 points over this past week, which equates to about 30 points in the S&P 500. So you can see the market is beginning to trend down. So folks, we had another tough week this week as the market is topping out and worries about what's going on in the Middle East, and also the Federal Reserve worried about the increased costs and tariffs, or what those increased costs will mean relative to the rate of inflation, and so it's holding steady on interest rates rather than lowering them. And don't forget, the European countries have lowered their interest rates over the past year, and we really haven't done much on that front at all. So folks, go out this weekend, take your mind off the market, be with your family, be with your loved ones, go for a walk, watch television, whatever you want to do. Take your mind off the market. And most of all, stay safe. And folks, we'll see you back here in a couple of days.